Hey, Mohamed, it's not just equities that are under pressure. Yields are coming down, too. Part of that being that this is a safety trade. You get worried about what's going to happen on a geopolitical front. Maybe you're more interested in buying treasuries. Yields at this point down across the entire spectrum, 2-year down a little bit this morning, too. What does this threat of a Russian invasion in Ukraine do to the Fed in terms of its ability to go ahead and raise rates as quickly as they'd like to? They've got to be looking at the inflation picture. How much does this kind of measure in as well?
Yeah, and Becky, if they were to look at 2 10s, that was under 40 basis points earlier this morning. It's about 41 basis points. Massive flattening. If they were to look at 7 10s, that's very close to inverting. So if the Fed were to take a holistic view of what's happening in fixed income, they would be worried that the market is pricing in a policy mistake. The market is pricing in a Fed that is too slow and then somehow ends up derailing the economic recovery. So it's really, really important. Now, what should the Fed do? Becky, it's very difficult for me to say that. I'm so glad you have Jim Bullard coming up because the choices aren't particularly attractive. They've gotten themselves in this hole. Should they be bold to try to regain the inflation narrative and the policy narrative and risk to derail the economy and really undermine markets? Or should they go very slowly, be data dependent, be nimble, and find themselves in the trap of developing countries where you're chasing the market narrative all the time and you never catch up? That's where they are. You know, if it were me, I would opt for slower rather than bold, but I would recognize that I am way far from the world of first best.
Mohamed, going slower, or really anything slower than, a hike every meeting this year, maybe a half point in March, might actually now qualify as a somewhat dovish surprise. I mean, that's how much the market has gotten ahead of steam up about the tightening expectations. Do you think that's the case?
So it would initially be viewed as dovish, and then people very quickly would realize that it doesn't solve anything. And that's why I stress that we have to recognize that having missed all the windows that were open to it, the Fed now doesn't have a first best policy. Look, I'd rather take that risk, Mike, than the other risk. I mean, it's incredible for me to hear that people who were in camp transitory 5 months ago are calling for the Fed to go 7 times this year, are going for the Fed to go 50. Some are even saying do an emergency hike. I worry whether the economy can absorb all this. This is an economy that has been conditioned and markets that have been conditioned to function with very low interest rate and incredibly loose financial conditions. So we've got to be careful as to how the market reacts and how the economy reacts.
Shepard Smith here. Thanks for watching CNBC on YouTube.